Hi everyone and welcome to Pepperstone's Technical Analysis Wrap on Thursday the 9th of April. So the day before Good Friday we find a lot of the major pairs and indices at key levels probably consolidating prior to the Easter break, which I guess is no surprise. So we'll jump straight into the charts and see if we can isolate some opportunities that might get us through the day and into early morning. So we'll start with the Aussie USD. So we can see we've got a daily chart here. It's broken to a bit of a new high, which would normally lead me to believe that there's a change of trend, which I mean technically it is on a daily, but it does find itself at a pretty key area. So what we're going to do, we're going to jump into a few of the smaller charts and see if we can isolate a potential change to basically scalp, because like I said many times over, this is not really a time to be taking these long-term trend changes. We want to be probably scalping smaller opportunities. So we can go down to the 4-hour chart here and we can see that although it's made a lower high, or higher high and a higher low, it hit the 200 moving average and sold off it a little bit. So it's finding itself still at a place of resistance. We've got a little bit of MACD divergence. I mean, we can basically draw that line there, so we can see there that we've got class A at resistance. So that leads me to believe that if we're looking for a bit of a scalping opportunity on this one, it would be to the short side and maybe only to the 20, because you don't want to be trading against the trend, and the daily and the 4-hour are definitely indicating that it's looking a bit long. So ideally, if you're going to scalp this one, you're probably wanting to be going only to around these moving averages here, where you could be expecting a potential relaunch. But the MACD divergence is definitely there, and it is at resistance, no question about that, on the 4-hour. Failing that, look, we can go to a 1-hour. We can see here, obviously, that we've got MACD divergence as well. I'll paint that for you so you can see what I'm talking about. Okay, so that is present there, a little bit more present than it was on the 4-hour. It's already had a little bit of a sell-off, but again, we could probably be looking at potentially breaking down. If it breaks down below this moving average on the 20, we could be potentially looking down at this level here to maybe take a scalping opportunity in the short direction. But again, definitely only a scalp, because it's not giving us any indication that it's going to sell off heavily. Okay. Let's move on to the USDCAD. This one here is still hovering in the area, hasn't really done anything since we last spoke about it. You can see there's the 4-hour chart, still at a pretty key zone. We'll take it out to a daily. You can see here that it's definitely trying to make a new low here. It hasn't done it yet. It needs to make a new low and get past a close below this level here to convince me that this is going to change from an uptrend to a downtrend. Hasn't happened yet, so we need to go to the smaller time frames. We've got basically a bit of a bottom here in the direction of the existing trend. So a bit of divergence we can see. I'll draw that on so you can see what I'm talking about. Okay, this is class B divergence because the bottoms are equal. Okay, so we can see here that the price is roughly at the same level. So looking for you probably want to be going down to another lower time frame again. What we're looking for here is definitely a series of higher highs and higher lows that will convince us that we're going to be starting to move in a positive direction again and start to move up. So we want to see a higher trough and a higher peak. So if we get a new peak above this on the 1-hour chart, that will convince me that we're potentially looking for a long opportunity. But once again, probably scalping, and we're only going into these highs here. So around that sort of 142.50 area would be a pretty good target to go for if we get that series of higher highs and higher lows. Okay, we'll go on to the US dollar Swissy. This has just been, a little scalping bonanza on the smaller time frames. You can see that it's making lower highs and lower lows, sticking within a range. This is a 15-minute chart. You can see that it's well within the range that it's been trading in for quite some time. So very easy take profit and stop loss levels on this one. So basically you got your support line here and you got your resistance up here. So just trading within this channel, the 200 has pulled it up on the daily here, as you can see. So pretty much what we're doing on this one is just scalping the up and down channel. Go to the smaller time frames, look for the higher highs and higher lows. Again, you just have to be really mindful that it is a public holiday. We're going to have 3 days off now in Australia, obviously, and I know Good Friday's off everywhere around the world, so the markets are going to be closed. So I wouldn't be expecting to see a great deal of activity. So it's very small scalping opportunities, especially on a pair that doesn't move a lot anyway, which is the Swissy. Okay, we'll go over to the US dollar yen. We can see here it's still finding itself at this critical zone here at around sort of the 108 1750 area. You can see here that you know, it's rising, it's staying above the moving averages, but you can see how strong this support has been all the way through. This is the daily chart, so it's obviously a very, very key level for it. Yeah, it's hovering above it, there's no question about that. So you're probably looking at again, dropping to the smaller time frames, looking for those series of higher highs and higher lows to convince us that it is starting to move in an upward direction. You know, there's plenty of blue sky in front of it if it does start to move up. You know, it's got not much traffic really all the way to at least the sort of 110.20 area before it starts to find any serious resistance. So yeah, still plenty of room for it, good 150 pips if we get that higher high and higher low. But we want to be seeing a break at least above this level to convince us that it's going long, and that'll still give us, you know, pretty much a good 100 to 120 pips before the next resistance level. Okay, the S&P 500. All right, this continues to, you know, make new highs. You can see here that it's gone again and made a new high from our support line or resistance line that we had here the other day. We'll break down to a smaller time frame. You know, we can see here that we've got, you know, a little bit of a double top starting to form. Obviously not formed yet, so it's only the start of what could potentially be one. This is a key resistance level for it and a key support zone. We need to go out a few time frames to actually see it, but it is definitely there. You can see here that right through this line here, I'll draw a horizontal line. Okay, so you can see here that it was a key support here, it was resistance here and resistance here, and it found a lot of trouble getting through this. Now this is a weekly chart, remember, so you know, these are weekly candles. It's obviously a very, very important zone for it, so we need to pay, you know, close attention to what is going on here. You know, for all intents and purposes, it does look long, but you know, you have to factor in that, you know, what good news is coming out of the US at the moment. They're about to start an earnings season, which they know is going to be completely crippled by at least 6 weeks of no action in the economy. It can't be going on just drops of you know, coronavirus infections. So we've got to be a little bit careful. We've got to treat it as a technical trade, and yeah, definitely factor in that it's probably going up. You know, it could be what is sometimes known as a sucker's rally, so you've got to be a little bit careful on that one. There isn't enough good news for mine to see this rocketing back up to 3,000, so we're probably looking for more shorting scalps. But again, not trying to take big long positions on this one, looking for scalping opportunities. Go to the 4 hour, you can see that we've got a little bit of a double top, potentially trade that into the resistance level, which could provide support now. Again, just look for these smaller trades. Don't go for any you know, big moves. Just look for the support and resistance zones around the area and trade into them, and you're probably going to get the best results doing that until we get some clear, definitive action and a trend that we can actually follow. So just probably look for those short-term scalps on this one as well. Okay, we will go on to gold. All right, gold is still looking like it wants to track higher. This is the one that I still have a little bit of faith in that can actually start to move in a positive direction for, you know, a bit of time, because we can see here that we've got a series of high highs and higher lows again on the daily, so it's certainly trying to break up. We want to see a break of a daily candle above this level here, so probably, you know, a candle breaking the 1670. If we get that, I'll be convinced that we're probably going to go onto the new highs and push the 1700 again, and then, you know, potentially up to the 1750. So definitely giving us signs that it wants to go long, but it's still got a little bit of work to do. We need to see a daily candle close above this level here. So I'll pop that in I'll pop a line there so we can see that. Okay, we want to see a daily close above this level here, and then we can start to look for the long opportunities again to the 1700 at the very least, but probably pushing on to the 1750. We need to go out a fair while to actually see where those highs are, but that is what's possible. Not a lot in front of it if it gets past this zone, and that's what probably excites us the most. That if it does break past there, there's not a lot stopping it, you know, all the way up to that sort of, you know, high 17s really. So a good one. All right, we will go on to the pound USD. This is the last one we'll look at today because there's not a lot of movement in the other ones. Again, really good scalping opportunities. You can see we had this really nice trade here. This is a 4 hour chart, so you can see we had that nice hammer candle on what was that little double bottom in the direction of the trend. That's obviously already played out. Came back and retested the neckline, which is what we love to see, and then off it went again. All right, it's going to find a little bit of trouble at the 200 more than likely, especially in this quiet market. Quiet markets respect support and resistance zones a lot more than crazy out of control markets. So you can expect them to be gravitating to these levels, but that doesn't mean that it can't push on to this sort of 124.50 level. So there's certainly some room for scalping. You've got 40 or 50 pips there that are available. If it hits there, more than likely you'd be looking for shorting opportunities on the smaller time frames. Expect to find some resistance in this level here, and the 200 sort of complementing that, and then potentially look at shorting it back into the support zones here again. We've got a support through this level here, so around that sort of 23.30. So it's probably 150 pip range there that you can trade and scalp in the next 24-hour period before the break when the market stops. So so pretty much that wraps up what we're looking at that's worth looking in the technical space. I think you just have to be mindful, obviously, that it is a day before Good Friday, so the market's going to be slow. Look for the trading opportunities and basically just go for the scalp into support and resistance that are obvious there, and go for probably smaller moves that you normally would, just knowing that the time frame is going to suit that sort of trading. So hope everybody has a fantastic Easter break, and I look forward to seeing you all next week when we commence again on the Wednesday night webinar. Thanks, guys.